data, see what it all meant, and kind of give you guys a skinny about what we're facing here. So first things first, right? S&P futures are up a nice 30 handles over here, about 0.7%. Nasdaq also futures are up and following a really strong day on Wednesday. Dow futures up a little bit more towards their all-time highs. Nasdaq, boy, that was the place to be yesterday, wasn't it? It was real strong. At one point, the S&P 500 cruised higher by more than 3%. It actually erased all the losses that were in place for July, all in one day. Pretty amazing, actually, if you ask me. Stock started higher at the open yesterday and just continued to move up from those opening levels all the way near. I think the S&P 500 was up close to 2% at one point in time. So they did retreat towards the end of the day after the press conference from Chair Jay Powell from the Federal Reserve. Now let's talk about that for a minute. Well, the Federal Reserve had another policy meeting, two-day policy meeting on Tuesday and Wednesday. It concluded yesterday with a policy statement that said that they were going to keep interest rates at 5.25% to 5.5%. However, they did indicate or signal that the data that's been coming in recently has been more favorable, and they've been pleased with the data and the approach towards a 2% target in inflation. Now, if you heard Chair Powell in the last time that he was interviewed, which was right after the June meeting from the Fed, he did say that they will not necessarily wait till they reach the 2% target to start cutting interest rates. In fact, he was very emphatic in saying that as long as we are making an approach towards that level, a soft landing, if you will, towards 2% interest rate, inflation rate, it will be okay and appropriate to start loosening policy, which means cutting interest rates. Now, the Fed funds futures as of this morning are nearly pricing in an 87% chance of a rate cut in September. There you go, 86.5. One rate cut. But look over here. The market is starting to price in 2 rate cuts in September, which would be 13.5% chance. So about a 1 in 7 chance of 2 rate hikes in September. Unless the data is coming in really bad and growth starts to really slow down, this ain't going to happen. All right, I'm telling you right now, this ain't going to happen. The markets can price it in as much as they want. We have almost 7 weeks to go before, 6.5 weeks to go before the next meeting. We have probably a keynote speech by Chair Powell at the Jackson Hole conference coming up later this month, which he's probably going to reiterate some of the stuff that he said yesterday at the press conference. But this is not going to happen. Let's look to November. 3 meetings left to the end of 2024. This one is mostly pricing in another cut in November, about a 76% chance of cut, right? It's even actually pricing in a third cut down over here. So this is pulling this in a bit more, right? So 74% chance of a cut in another cut in November. December is seeing a third cut. So basically, what is the Fed funds futures market doing? It's pricing in a cut at each meeting into the end of the year, right? Now, if you go out further, let's go out to 2025. I like to look out to June in 2025. They're saying 3.75. That equates to 6 rate cuts from here. So three now and 3 early on in the first part of 2025. A little aggressive, if you ask me, right? The Fed is very methodical. They're slow right now. And, that is deservedly so. They should be slow, paying attention to the data and waiting for the data to tell them what to do, as opposed to getting ahead of the if the Fed starts listening to the markets rather than the data, that is where they're going to get into some big trouble. I think what Chair Powell shared yesterday is the fact that they've acknowledged the strength in the labor market. That is one of their two mandates: stable prices and supporting full employment. Those are 2 mandates from Congress that really what the Fed is job's supposed to be. but they did acknowledge that the strength in the job market is starting to show some cracks, small cracks. This morning we did get a good productivity report, and I can show you that here. Jobless claims went up. Productivity 2.3 versus 1.7 expected. Unit labor costs down sharply from the last quarter. Second quarter only up 0.9 and was expected to be double that. So as far as the data for the economy is concerned, GDP at 2.8%, productivity strong, unit labor costs low. That means that the economy is growing nicely organically and not being driven by inflation. Okay, so the wage inflation is not contributing to the large amount of growth in the economy. So that's a real positive. When productivity is driving the action, is driving the bus for GDP. That means the Fed can start thinking about a looser money policy, loosening up on the tight conditions that we've had for the better part of a year and a half. So it's been a year since the Fed last acted on monetary policy. The last move they made was July 30th in 2020, July 31st in 2023, which concluded in the last rate hike that we've had so far in this cycle. Nowhere in the statement, nor anywhere that what Powell talked about yesterday in the press conference did he signal that any more rate hikes were coming. He didn't even talk about higher for longer anymore. So he did say that if the data is moving in the right direction, that a September rate cut could be on the table. It certainly was likely to be discussed. I suspect that in this meeting this week, it was discussed again. There were a few people in the meeting who actually did want a rate cut in July. Everybody voted the same. Everybody voted to keep the policy the same. But there were some people, he did say that in the meeting, who had desired a rate cut this time around. So the doves are starting to fly. The hawks are starting to fly away out of the meeting. So we'll see what happens here. Over as far as earnings are concerned, Meta, of course, last night had real strong earnings. Stock's up huge today. We have some calls on that one. We put those out in the chat room as well too. Lilly is up strong this morning on some news. ARM is down. They had good earnings last night. I think their guidance was a little bit suspect. Qualcomm as well too. Tonight we'll have earnings coming out from Intel and Coinbase and DraftKings, Roku and Square Block. Oh, Apple, right? Apple and Amazon are also coming out too. I just trying to be funny over there. So we already knew Apple was going to be coming out. So they will be responsible for giving us a lot of movement after hours tonight. Tomorrow morning we'll have earnings from ExxonMobil and Chevron, Frontier, Enbridge, Fluor, and a couple others. But also the big news tomorrow morning is going to be the labor report, which comes out for July, and that will give us more data, more evidence of what the economy is doing. Job market is remaining strong. The ADP report that came out yesterday, a little bit less than expected on the private payrolls. I think it came in at about 120,000. So that'll be interesting. A report that came out this morning from Shake Shack, right? A lot of people have been talking about restaurants being the place where spending is starting to slow down. We heard that from McDonald's earlier this week. Well, apparently not Shake Shack. People are buying chicken, they're buying burgers, they're buying fries over there, and those are not cheap. Believe me, I've been there, and that food is not cheap. But on the other hand, shoes, Crocs came out with an inline earnings report this morning. The stock is down a bit today. We'll be taking a look at that one as well too. I think I saw Wayfair came out with their earnings this morning as well too. So let's see what are they doing today. Oh yeah, they're getting pounded today too. They came in basically in line with their earnings. So in line is not good enough, right? If you beat earnings, if they lowered the bar for you, if you beat earnings, your stock's going to move much more nicely. So such is the case for AMD yesterday, which actually came off of the highs, but it did rise about 3.5% yesterday. At one point, up almost 10%. It did have a nice earnings report and did guide up a little bit. But again, the stock, the chart is in enormous downtrend. So the sellers hit that thing all day long. So stocks that one more couple things I want to show you here. Look at the 10-year. Has anybody been talking about this? The 10-year yield closed yesterday at 4.03. It's gonna about to break 4% today, which is driving the action in the bond market. So bondholders are starting to clamor for long-term bonds, the 5-year, the 10-year, the 30-year, 20-year. They're looking at bonds, and in effect, what's happening here is the more people are driven to these long end of the curve and ignoring the short end of the curve, where I'm looking at you, the 2-year, you're going to see that inversion starting to get closer to zero. So we've seen that inversion happen for quite some time. So once that inversion moves towards zero, that's going to be more of a positive effect for markets as well too. We're seeing strength in gold and crude oil again. There was an attack in Iran against one of the Hamas leaders, and that driven a lot by the gains in crude yesterday, especially driven a lot by the emotions, the fact that they could cut supplies and have some short-term supply disruptions. That doesn't dismiss what's happening with the economies around the world and the demand that's still strong for energy and oil. But gold is also up as well too. Had a really strong day yesterday, near at or near all-time highs for gold futures. But anyway, so I want to bring your attention to you. Does it appear that the 10-year is going to make a run towards these 3.8 levels? It certainly looks that way, doesn't it? And we remember what happened back in the early part of the year when yields went down to those levels, because the anticipation or the expectations the Fed was going to have a lot of rate cuts in 2024, right? 6 or 7. Remember that all that talk was being priced in? All that went away, and yields went right back up again, and they've come back down. Now, are they going to turn around and go right back up again? Only if inflation starts to rear its ugly head, right? And the Fed already has tight policy in place. They don't have to move off that tight policy. So the chips are all at the table, and most of them are sitting in front of the Fed, right? So let's take a look at a couple of other charts here before we go. I'm looking at Amazon today. They have earnings coming out. The stock really made a nice move off this 100-day moving average. And I think if they can make it have a good report and have a good response to that earnings report today, I think it makes a run up to 200, and then beyond that over the next couple months, maybe up to 210. So I'll be looking at calls on that one today. Not really excited about too many earnings plays today. I've been kind of playing it close to the vest the last couple of weeks, not playing too many of these names. Again, I did have some Meta, but Roku was also coming out. I'll be watching that one. I've been seeing a lot more opportunities showing up to make trades on stocks that report and then making a play after earnings come out. One of the names that we did last week was 3M, right? I did have some calls coming into the earnings report, but I did add calls, as you recall, in the chat room and even in Twitter and even in the service, that same day when the stock was already up about 12%. It ran even higher after we entered the into the name, and we still have supporting about a 65-70% gain on the 3M. I think that's going to be a big winner over the next 6 to 8 months. DraftKings coming out, Coinbase coming out. Who the heck knows where you're going to get? It's Coinbase, right? It usually drives the driver of Coinbase has been Bitcoin, right? And Bitcoin's been strong. Coinbase is going to be strong. It's been sort of mediocre here. The price of options on Coinbase are extremely high right now. So I really would be careful getting into that one. I have some stock on that one, and I've written some calls against it. So a little bit of a hedge in place there. And then finally, Block is one. Square. They had really good earnings back in February, and you can see that stock took off. We had some calls on that one. May not so great, but you can see the stock is down here near the lows of 2024. So perhaps the bad news is priced into the stock already. Jack Dorsey runs this, the guy who started Twitter. He runs Square, runs Block. A couple of the other names that were similar to that actually produced some good earnings, like PayPal came out with good earnings this week, and they followed through yesterday. So I'm looking at making a play. I do have a few calls on Square already, and some stock on it. I'm looking at maybe making a play on Square block into the earnings. More likely a little bit further down the road. This is not unlikely going to get up to these 70 levels. We're at low 60s right now. Something in at the money call, possibly maybe one strike out of the money, like a 62.50. September, October. Give yourself some time. That's what I like to do. I like to give myself a little bit more time instead of looking for this the one-shot deal that that stock sayers are going to make or break me. Right? That's a guessing game. Right? It's already a guessing game for me because I know the chart is ugly right now. I'm taking some risk that ugliness has already been priced in with the earnings. So am I looking for a big move? Look, from 61 to 72 or 73 is about a 20% move. That is a huge move for a stock, right? Now implied volatility is up for a name like Block over like Square over here. And of course, if you go back to the early part of the year, stock really came down a lot from 80 all the way down to 68, and it had that big move up on earnings. So while my expectation is not for a huge move up right after earnings, it could happen, right? And if it does happen, I'll have a small position on, and I can reassess it tomorrow or next week and say, okay, is this worth another move, another trade to the upside, or is it to the downside? I don't know. We'll figure it out. All right. That's it, everyone. Have a great day. Keep cool. It's going to be a hot day today out here in New England. It's about 94 degrees today. No, we're not turning the heater on. And I appreciate everyone spending a little bit of time with me. If you've got a chance, take a look at advisorpedia.com. I did a podcast with Lindsay Bell. Yeah, on Tuesday, it's up for you to download and to listen to. It was a really great 45 minutes with Lindsay. We talked about a lot of different things about the markets, the economy, and even the Olympics. Made it into our podcast. So advisorpedia.com. Take a look at that, and if you have a chance, and I'd love to have some feedback on what you think about it. So have a great day, everyone. I'll see you guys all back on Monday. Trade well today, and don't forget, big earnings coming out today, jobs report tomorrow. Have some protection on. I know the markets were up a lot yesterday. I know the markets are up a lot today, but this is the time when you've got to be able to grasp and embrace the fact that having some insurance on is going to help limit some of the big movements in your portfolio. Enjoy yourself. Have a great time, and good trading today. And thanks again for spending a little bit of time with me. Take care. Bye. Summer breeze.